Hey everyone, and welcome back for another deep dive crafted just for you.
You know it.
Today,
Let's do it.
we're wading into the world of crypto,
Right.
specifically Ethereum's recent price struggles.
Yeah,
It's been lagging behind Bitcoin,
it has.
and we're here to figure out if this is just a dip or a sign of a full-blown downfall.
And we're not just looking at price charts.
Right.
We're diving into investor sentiment, market trends, and even some of the tech talk to give you the full picture.
Exactly. So to set the stage, Ethereum just hit a 42-month low against Bitcoin.
Wow.
That's right, a 42-month low.
Ouch.
September 15th was the day, and let me tell you, people are freaking out.
Yeah, it's definitely causing a stir.
Yeah, Alex Thornton, head of research over at Galaxy, put it pretty dramatically on Get This Twitter. He said, and I quote, "ETH BTC just traded on a 0.03 handle for the first time in 3.5 years, negative 53% since the merge in September 2022. What stops this train? Okay, first of all, what stops this train? Drama.
Yes, a little bit.
But also 0.03 handle. Break that down for us. What does that even mean?
So trading on a 0.03 handle in this case means that for one Bitcoin, you could snag over 33 Ethereum.
Wow.
That's how much cheaper, relatively speaking, Ethereum has become. And when you look at that alongside the 53% declines since the merge back in 2022, it does paint a picture of a pretty significant downtrend.
Yeah.
And that has people worried.
Okay, yeah, a 53% drop since the merge is not ideal, and I'm seeing some analysts like Shred Kruger are straight up saying Ethereum is on the edge of collapse against Bitcoin. That hyperbole, or this is as dire as it sounds?
Well, edge of collapse is definitely attention grabbing, but Kruger's likely looking at some very specific indicators. We're talking about things like declining developer activity on the Ethereum network. Basically, are fewer people building and improving it. He's probably also looking at the total value locked, or TVL, in decentralized finance, or DeFi, on Ethereum. This is a measure of how much money is actually being used in DeFi applications built on Ethereum.
Right.
A shrinking TVL could be a sign that confidence in Ethereum's DeFi ecosystem is waning. Now, these aren't the only factors, but they give you an idea of what a more in-depth analysis might consider.
Okay.
It's not just about the price today, it's about the health and activity of the entire network.
See, this is why I love these deep dives. You learn something new every time. Okay, so we've got these alarm bells ringing, edge of collapse, all that. But I'm also seeing other analysts who are calling this a potential bottom for Ethereum. They're pointing to like historical chart patterns and saying, hey, this could be a buying opportunity.
Yeah.
And Biesa, for example, is saying that Ethereum has bounced back after hitting similar levels against Bitcoin in the past. So is this a case of history repeating itself? Or are they just clinging to past trends that may not hold up?
That's the million-dollar question, isn't it? Are we seeing a repeat of history, or is this time different? Chart patterns can be helpful,
Yeah.
but they're not a crystal ball.
Right.
It's a bit like saying this bakery always sells out of croissants on Sunday, so if I go next Sunday, I'm guaranteed a delicious pastry. Sometimes they might run out of flour, or there's a blizzard and nobody leaves the house,
Right.
you know?
Okay. That's a delicious analogy. I'm not going to lie. But you're right. Things change. So while those historical bounce backs are interesting, it sounds like we can't just assume the same thing will happen this time.
Exactly.
Yeah.
The crypto market is notoriously volatile, and relying solely on past trends is a risky move.
Right.
There are always other factors at play.
So, sure.
New technologies, regulations, even just overall market sentiment.
Yeah.
We need to look at the bigger picture.
You know, you mentioned sentiment, and that makes me think about something else. We dug up the whole ETF situation. Bitcoin ETFs have been seeing huge inflows, basically tons of money pouring in. But Ethereum ETFs?
Yeah.
Not so much.
Not real.
In fact, they've had $581 million in net outflows, meaning investors are taking their money out. What's the deal with that? Does it mean investors are just feeling more bullish on Bitcoin right now?
It's definitely a sign.
Okay.
And it might go deeper than just short-term bullishness.
Yeah.
Think about who's often behind these big ETF investments, institutional investors, right?
The big firms.
Big firms, asset managers, those types. This outflow from Ethereum ETFs could mean those institutional players are hesitant about Ethereum's future, at least compared to Bitcoin.
Okay, interesting. So it's not just individual investors getting spooked. Maybe bigger players are seeing something that's making them hesitant about Ethereum.
Potentially. There are a few reasons why that might be. Some institutional investors might be concerned about Ethereum's regulatory landscape, which is still a bit murky compared to Bitcoin. Others might be more confident in Bitcoin's established position as like the digital gold, a simpler narrative, you know? Then there's the whole scaling issue, how many transactions the network can handle. Bitcoin has its own scaling solutions, and Ethereum is still working on its main one even after the merge. So investors might be betting on Bitcoin's more proven track record in that regard, at least for now.
All right, so maybe they're just more confident in Bitcoin's roadmap for the future, whether it's regulations, technology, or just its place in the market. But here's what really threw me, Grayscale's Ether ETF. That one alone accounted for a massive $2.7 billion of those outflows. Why is that one ETF getting hit so much harder than others?
That's the billion-dollar question, right? It could be a number of things. It might be specific to Grayscale itself, maybe concerns about their ETF structure, their fees, or even just investor confidence in their particular product.
So maybe it's not necessarily a reflection of Ethereum as a whole, but rather something specific to Grayscale.
Possibly. Or it could be indicative of a broader trend among certain types of Ethereum ETFs that Grayscale represents. This is where things get tricky. There isn't always a clear-cut answer.
Right.
And it requires more digging into the specifics of those ETFs.
This is why we do the deep dives.
Yeah.
It's not about giving a simple answer. It's about understanding the different factors and complexities. But this does raise an important question for our listener, especially if they're thinking about investing in any Ethereum ETF. How do you even begin to evaluate them?
You hit the nail on the head. It's crucial to do your due diligence. Don't just jump in because of hype or because you heard Ethereum is the next big thing. Look at the ETF's underlying assets, its expense ratio trading volume. And this is key. Make sure you understand the risks involved.
Right.
Don't just chase the hype. Make informed decisions based on your research and your risk tolerance.
That's why I love these deep dives, right?
Yeah.
You peel back the layers and realize there's always more to the story.
Yeah.
We've got these micro-level factors like chart patterns and ETF specifics. But what about the bigger picture? Are there broader market trends at play here that could be influencing Ethereum's performance even beyond just the comparison to Bitcoin?
Absolutely. Remember, the crypto market is still relatively young and can be influenced by what's happening in the broader financial world. For example, we've seen interest rates rising globally. That tends to make riskier assets like cryptocurrencies less appealing to some investors.
Yeah.
Why? Because safer investments like bonds are suddenly offering more attractive returns.
Right. Makes sense.
It's all connected.
Right. So even if someone believes in Ethereum long-term, they might be shifting their money around based on these bigger economic trends.
Exactly. And we can't forget about the regulatory landscape.
Right.
It's still evolving. And that uncertainty can make big investors hesitant. Think about it. Would you want to put a ton of money into something if you weren't sure what the rules were going to be next year or even next month?
Yeah, that's fair. That's like trying to build a house on shifting sand. Okay, so we've got those external pressures. But you mentioned Bitcoin being seen as the digital gold. It feels like this whole Bitcoin dominance thing is important, right? Even if someone isn't directly invested in Ethereum, if Bitcoin keeps grabbing more of the market share, does that impact the entire crypto space?
It definitely can. A rising Bitcoin dominance could mean investors are flocking to what they see as the safest, most established player in a volatile market. Like during a storm, everyone wants to be on the biggest, sturdiest ship, right? That could lead to less capital flowing into altcoins. Basically, any cryptocurrency that's not Bitcoin, and that includes Ethereum.
So less money, less buzz, potentially less innovation.
Potentially, but it's not necessarily a winner-takes-all scenario.
Right.
Both Bitcoin and Ethereum can thrive even if their market dominance fluctuates over time. It's
Yeah.
more about understanding the interconnectedness and how investor sentiment can create these ripple effects.
Okay, so we've covered a ton of ground here. Price drops, historical patterns, those wild ETF flows, the overall market mood. Where does this all leave us? What's the key takeaway for our listeners, especially if they're trying to make sense of Ethereum's future?
I think the most important thing to remember is that price doesn't tell the whole story.
Right.
Yes, everyone wants to see their investments go up, but focusing only on the short-term price movements can distract you from the bigger picture.
Yeah.
This deep dive has shown there are valid arguments on both sides.
Right.
Some people see this dip as a huge buying opportunity, others see warning signs. The key is to look beyond the hype and those attention-grabbing headlines.
To form your own informed opinion, right?
Exactly.
Based on the data, your understanding of the technology, your risk tolerance, all of it.
Exactly. And that's what makes the crypto world so fascinating. It's not just numbers on a screen. It's a whole ecosystem of technology, economics, and even psychology all mixed together.
You know, this whole conversation has me thinking, the article we started with and a lot of the analysis out there focuses heavily on price, but Ethereum has always been about more than just price, hasn't it? There's this whole argument that it's technologically superior to Bitcoin, with the potential for applications far beyond just being a digital version of gold.
That's a big claim, and there's definitely a lot of debate about it.
For sure. And maybe that's something we do a whole other deep dive on. But it brings me to my final thought-provoking question for our listener to ponder. If Ethereum is the future, if it delivers on its potential, does this short-term price weakness really matter? Is this just a blip on the radar in the grand scheme of things? I don't have the answer, but it's certainly something to think about.
And that's what we want these deep dives to do, give you the information, different perspectives, and some food for thought to take with you, because ultimately you get to decide what it all means for you.
Couldn't have said it better myself.
Eh.
Until next time, happy diving, everyone.